This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
At this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, January 20th, and this is the AgYield War Room. Dan Dempsey and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. Be sure to get to it during the show. Overnight markets are at March corn down 1 3/4 at 4.23. March soybeans were down 1.5 pennies at 10.56 1/4, and March Chicago wheat was down 3 3/4 at 5.14 1/4. Excuse me. This morning we had an export sales announcement: 190,000 metric tons of meal to the Philippines for 25. What we know here starting out the day over the weekend there, we got tariff threats from the administration towards fellow NATO countries regarding Greenland. So outside markets here this morning and yesterday sharply lower here. The Dow's down 730 right now. Some of the Bitcoins down 4,600. S&Ps are sharply lower here. So could see a little trickle down effect in regards to the outside markets. Also, stories out this morning that China has fulfilled their 12 million target, first target. So I think we kind of were resound to the fact that they were going to get there. And now it's going to be a kind of a wait and see, given that we're not the least expensive on the market. You know, are we going to continue to do business or what's going to happen there? So Justin, a lot of things happening here on this 3-day weekend. Guess maybe share a few thoughts and then we'll throw it around the room.
Yeah, Dan, metals are sharply higher again. So silver's up 7.5%, new all-time highs, dollars down. So a lot of volatility in the outside markets. We're just kind of stuck, very uninteresting overnight, for all the kind of big moves that we've seen in equities and metals. Our markets had, basically a 2.5 cent range in corn and I guess maybe an 8 cent range in beans. So yeah, I think we're just kind of stuck here for right now, unfortunately. I don't think there's anything too exciting that I can see. We're doing a little bit of business. I mean, I think it's, not to be keep repeating the same things, but, corn's a, big supply market and big demand market, and beans are kind of stuck with, low acres. So you kind of have a story if South America has a problem, but if you don't, beans are burdensome too. So you kind of look forward and you really don't need corn or bean acres right now, unless you have a major supply issue, I think, in South America.
And Dustin, what's on your mind as we start the week?
Yeah, Justin said it perfectly. I think, what's on my mind is the, new tariff threats on Europe, right? Like, what does that mean for outside markets today? We have the dollar falling substantially against the euro at the moment. Silver rising $95 an ounce now. A lot of just crazy moves happening. Don't want to rule anything out here. So how do you predict the future right now? You just can't. You got to kind of just set your parameters and just know where Farm Bill is covering you, what's going to happen when we get into the month of Feb and we know we've got a certain level of crop insurance. I don't really want to take any major opinions about where grains should go when corn and beans both have bullish and bearish, very, very compelling stories on both sides, to Justin's point about oversupply and high demand on corn. So we'll just have to wait and see how it plays out.
Yeah. And just to put that in perspective, silver's up, 300%.
Yeah.
So you don't want to rule out that, we could just view assets as just too cheap. So I do think there's that possibility as well, that you get to some point here where, the price of corn, for example, is just way too cheap comparatively. Not predicting that by any means, but to Dustin's point, it's just hard to. I think to have a super strong opinion is kind of silly here. So,
Ben, congratulations to the state of Indiana on their first. Am I right? They're the first national championship
First
in
national
Indiana
championship
football.
in football. Yep.
Wow.
first
Well,
Heisman.
let's not forget.
Yep.
Yeah, Heisman. I mean, 16-0, first team since the 1800s to go 16-0. And I think we can start discussions of this being one of the best college football teams of all time, and probably the greatest coaching job of all time. So,
Certainly the most improved in a 2-year time frame of all time.
amazing.
Yeah.
I mean, as a Purdue alum, I mean, to see Indiana's national champions is like, how did we let that happen?
Yeah, it's a pretty exciting time. Great game. Sad to see the end of college football season. It's one of my hobbies. That and grain markets, not really a hobby, but a life choice. I think grains are just not interesting to anyone. I traded texts over the weekend with a longtime grain trader, which is very active, and they basically said, I don't even want to trade corn right now, right? And corn is the king of ag contracts. It's like they're just nothing here. When you look at the commitment of traders from Friday, I thought that had some compelling data. I mean, people were talking about where's the open interest going. Well, commercial stepped in and bought it, so they found value here. Do they continue to find? Does it take lower prices now for them to step in? I mean, you would think it would if they would continue to buy it in the lower market if they found some reason to own it here. And then ask yourself, does managed money really want to be short ags with the narrative that Justin and Dustin talked about, which is some really strong outside markets, physical commodities that are have a tremendous run. And I think that speaks volumes of the amount of money that's out there that's chasing returns. But in corn and beans right now, you get heavy vol sellers, algorithmic trade, nothing exciting, probably not a huge reason to start building a big short, and definitely not a big reason to get long. We've seen the same 50 to 70,000 contracts try to sell corn 3 times in the last probably 6 or 7 weeks, and twice they got run in and bought it back. I don't think this time we're going to shake them out. I think they'll probably sell more if we rally. I don't know if they'll cannonball it here, but momentum traders jump in. If they see any reason to, they'll sell it too. So just not an exciting story right now. I think that really good point, I think was Dustin. You just kind of have to set your parameters, both as from a risk management perspective on your farm, and from a trader's perspective of, identifying places where you're willing to engage if you're going to sit on your hands for a while. Just being willy-nilly this is a market that's going to chop people up in both directions. So just not a lot of excitement here. Early this week, have eyes on export inspections this morning. We didn't have great sales over the holidays, which could be expected, but let's see what inspections look like and see if they look really strong. We got good positive ethanol data last week, and the government needs to get moving on RVO, SREs, you name it, right? We need E15. We need some guidance, and we need a plan to see what we're going to do domestically to use more grain.
Had a question come in here from our viewers. Justin, maybe you want to take it. What would it take to get corn from the west to come east?
What would it take? I mean, price, right? I mean, it's all about basis and transportation cost. So it's what will happen eventually. It usually has to go, you usually have to have a pretty good arbitrage to get corn to move that way. I mean, it's meant to go to the PNW to go west, right? So we've seen it where, I mean, Ben can attest to this when he was at the Andersons. Like, we've seen it where it's $1.50 over in the east to try to pull those bushels. It's not a natural flow. Is that right, Ben?
That's correct. Freight is a moving target. depending on the time of the year and, you know, how far it's got to come from. In 2019, the really wet year, rail worked into Southwest Ohio at 90 cents-ish to $1. That typically will be the number that can, I'm not going to say basis wouldn't trade above that, because it can if someone is really short grain and needs to get it in the house. But that's a pretty good barometer. I'm sure that since that time it's a little more expensive like everything else. But you know, $1.15 over, you can rail it in. But for us, rail is a band-aid, right? You bring in 285, 300,000 bushels on a train. That's 2 days of grind, right? How short, you know, is corn in the Eastern Corn Belt right now? It's not. It probably gets a little tighter here as we work into, you know, the latter half of the marketing year. But $1.10 probably is what's going to pull it over Chicago and into Ohio and Indiana.
Well, and I guess we can take some of the undertone out of that question as well, as basically if you've got this overabundance of corn in the West, I think they're trying to figure out how to chew through it, right? I mean, that's the undertones of it. And we've talked a lot about on the show, just you got too much right now. Yeah,
and that's where the acres were this year. You know, we talked about, you know, how did you get to a record yield? It was all the other states, you know, not to downplay the other states, but it was, you know, Kansas, Nebraska, Dakotas. It wasn't on the excuse me, it wasn't on the delivery system on the river, right? It wasn't Indiana, Illinois, Iowa. It was outside of that. And when you have that many bushels out west, right, your markets are P&W, feedlots, you know, obviously the ethanol plants that are around there, but it's just not on the main, you know, tributaries to the delivery system. So it makes it where you can have really big variances in basis.
Yeah, I think that brings up a good point too for spreads. With what we know today, spreads should widen. And, you know, you wonder if all of this corn that's not on the delivery system will limit the amount that we can garner through spreads widening.
100% for sure.
Yeah, I think, you know, Kansas corn works into all the feedlots to their southwest locally. And I mean, that's it. All the corn is sitting in a place that's tributary to the PNW. And that's not helping, you know, that's not good for anyone right now.
Yeah, I bet that's a good point. I think that's 100% why the spreads are narrower than you would think for, you know, the amount of corn that we have. It's just where it's located.
I still think they move out as we get closer to first notice day and then the delivery. But I think that you have to, if you're going to be looking at bear spreads as a means of hedging, you probably want to pick a calendar date and a value that you're willing to be out of it.
Very good. Got a couple of minutes here. Rylan, it was really interesting. The Texas Ag Commissioner, Sid Miller, on Friday did us no favors. And I don't know if it was off the cuff, but referencing Screwworm and saying it's here was not a very positively favored statement. So maybe touch on that, and then certainly a strong week last week for hogs. So start us off for the week here on livestock.
Yeah, right. I mean, the machines just went absolutely nuts. That scraped that one because the headline and the way it circulated is pretty much the Ag Commissioner just saying it's pretty much a matter of when and not if Screwworm gets here, but it just seems like there's probably a better way to go about this than just, you know, throwing it out there in a really misleading way on social media that, you know, I think most people know at this point, like, yes, that's going to adversely affect the cattle market and the futures are just going to run wild with it. And it's a good wake up call for everybody. We've been on a nice rally. We've been kind of chopping around in a range, cash market pretty steady here. And we're still sitting just off record all-time highs. And we've got this kind of elephant in the room, or potentially soon to be in the room, if you believe the Texas AG, that can really cause a lot of fluctuations and volatility. So, I mean, this just goes to as a warning shot, I think, against anybody that has unhedged cattle out there, just wants a little bit of protection. I mean, it seems like it's a wise choice. You got a cattle on feed report at the end of this week. You got the cattle inventory at the end of next week. So there's a lot of factors that can really adversely affect price if we start seeing some of the numbers start to improve. So overall, I wouldn't be surprised to see a little bit of a bounce back today just because, hey, it's turnaround Tuesday, and even APHIS came out, or at least on their website, still confirming that there's no NWS in the U.S. So it just seemed like, overall, still probably a little bit of caution here overall, just from last week here. But all in all, the news wasn't too bad. You had choice up $1.95, select up 14, cash was steady about 230 to 233 in the south. So we'll see if that looks to continue here this week. And on the hog side of things, new contract highs, new in the back end of the market. Still seeing new highs for the move in the front, and just no cash posted. So because of confidentiality reasons from the Packers. So obviously it's going to be a little bit of question on how that shapes up. This wasn't just a one-off last week, getting cash up, $10 kind of late, or if things are going to hold together. So as of right now, I think the market still wants to stay long, manage money, still adding to their positions here, about 766 contracts. So it looks like they're probably building a much bigger position, probably going to confirm that on the next CFTC report. So looks like we want to keep the trend alive here seasonally. Futures still tend to trend higher here between now and February 17th, 20th. Those are those key dates. So we'll see if the fundamentals do support that for the time being.
Very good. Appreciate the update there. Just came into the open. We got March corn down a penny at 4.23 3/4. March soybeans are up a penny and a quarter at 10.59, and March Chicago wheat is down 3.5 at 5.14 1/2. If you're looking for deeper insight and more information on what's moving these markets, and I guess a deeper AgYield opinion, we've got the War Room Report is now out. Feel free to subscribe. Both the links are in the comment section. It'll take you right there to get you all set up there. We'll also be putting out premium videos. Our first video will be put out here later this week, referencing our first initial thoughts on crop insurance for this season. So be sure to get yourself signed up, and you'll start receiving those premium videos and the letter on a daily basis there. Also, 10% of the subscription fees go to the AgYield Next Gen Foundation, supporting scholarships in ag for the next generation of ag leaders. So be sure to check that out. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.